Hello everyone, this is Sunko, the Korean bro. Today is 2023, uh, September 15. It's already past 12:18. Um, not in the morning, not even, not even dawn. It's really late at night, but I feel like, I really had to do this YouTube. Mm. Okay, let's keep, reading and see what articles we have tonight. Okay. All right. Let's go on. Um, Time to buy Apple stock on D. Why China has banned government iPhone use actually means very little. Okay. Is Qualcomm stock a buy after its new 5G supply agreement with Apple? Kava investors say no. The top line isn't as important as this vital number. Hmm. Where will Oracle stock be in 1 year? Hmm. Hmm. Okay, let's go. Hmm. Time to buy Apple stock on this D. Why China's banning government iPhone news actually means very little. The recent iPhone ban in China is limited to government employees. Even if it's an omen of more restrictive measures, China's market isn't a must have. User stocks need jerk sell off as a chance to step into this stalwart company. Too many people took this ball and ran with it without ever asking if it mattered much. Not enough to matter. Hmm. A good reason to do so, but there's far more bark than bite with China's ban on government use of the iPhone. Whereas Morgan Stanley analyst Eric Woodlearn put it, would conclude Apple's recent stock move is indeed overdone as it implies Apple loses 70% of its iPhone shipments in China. A highly draconian and unlikely scenario. If this is the only thing preventing you from stepping into position, or if it prompted you out at one, don't be afraid to buy Apple or buy it back. The company stole the same journey it was just a week ago. Is Qualcomm stock a buy after its new 5G supply agreement with Apple? After much speculation that Apple was getting rid of Qualcomm, the two companies have struck with a new 5G chip supply deal. Qualcomm still needs to prove it can navigate out of a deep smartphone slump. Some risk has just been removed from Qualcomm's business for the next few years. Oracle posted mixed first quarter earnings report. Its second quarter revenue outlook is also missed analyst expectations. The stock still isn't streaming bargain. Its dividend is too low. Berkshire Hathaway loaded open shares of HP last year, but the bet hasn't gone as planned. PC sales have collapsed, and HP's premium business continues to decline. With a weak growth story and a slumping stock price, it's not surprising that Berkshire is pulling back. Zscaler's latest report exceeded expectations as customers continue to spend more on the company's offerings. The company's remaining performance obligations point toward a solid future revenue pipeline. Zscaler's solid position in the zero trust security market could translate into impressive long term growth and help the stock delivers tremendous upside. Terrific earnings growth could help the cybersecurity stock soar big time over the long run. The tech late on Nasdaq Composite Index delivered solid gains of 32% so far in 2023, thanks to favorable factors such as cooling inflation, robust economic growth, the receding chances of recession, the proliferation of artificial intelligence, which has given several technology stocks a big shot in the arm this year. Hmm. The Nasdaq could keep running higher along with the broader stock market. That wouldn't be surprising, as there are chances that the Federal Reserve could start cutting the federal funds rate beginning in the second quarter of 2024. It is worth noting that the Nasdaq was clobbered badly in 2022. It crashed 34% as the Fed raised interest rates to control inflation, but the situation seems to have changed for the better. That's why now would be a good time for investors to buy shares of Zscaler, not a composite component that has clocked impressive gains of 47% so far in 2023. Let's look at the reasons why. Zscaler is growing at a terrific pace. Okay, Zscaler is a leader in the virtual network security market, where it holds 5 percentage points more than second place Akami. Demand for virtual network security is growing at a steady clip. Thanks to the growing adoption of zero trust security, which is a security framework that requires identity verification of each user looking to access resources on a private network. With a zero trust security market expected to generate $118 billion in annual revenue in 2032, compared to $25 billion last year. As per Precedence Research, Zscaler is sitting on a massive end market opportunity. Join the fact that the company is building a nice customer base and is witnessing healthy growth in the adoption of its offerings. And it is not surprising to see why it is expected to deliver robust annual earnings growth of 60% for the next 5 years. For me right now, so the company seems capable of clocking 60% annual earnings growth in the future. If that's indeed the case, Zscaler's earnings could increase to $18.77 per share in 5 years based on its fiscal 2023 earnings. Multiplying the projected earnings with the Nasdaq 100's average forward earnings multiple of 27 will be translating to a stock price of $5 or $6, suggesting that the stock could at least triple in the next 5 years. That's why investors looking to buy a cybersecurity stock that could supercharge their portfolios over the long term should consider buying Zscaler before it soars higher. Zscaler released fiscal 2023 fourth quarter results, and it grew at a much faster pace than expectation. The cybersecurity specialist revenue mm, was up 43% year over year to $455 million, exceeding the original guidance, which called for growth between 35 and 36%. The company adjusted earnings increased at a much faster pace of 156% last quarter to $0.64 per share, exceeding its guidance of $0.49 per share. For the full year, Zscaler reported a 48% increase in revenue to $1.6 billion. Its non-GAAP earnings jumped to $1.79 per share from a $0.69 per share in the year-ago period. Zscaler's terrific growth case can be attributed to two factors: increasing the number of customers the company serves, the jumping spending by existing customer base. Zscaler ended the previous quarter with 7,700 customers, up from 6,700 customers in the prior year period. More importantly, spending by the company's existing customer base grew at a much faster pace. For instance, the number of Zscaler customers with $1 million or more in annual recurring revenue for the company increased 37% year over year last quarter to 449. Okay, get it. UI path. CrowdStrike. Once again, let's go. Okay, CrowdStrike is a pioneer. CrowdStrike is a leader in artificial intelligence-based cybersecurity. The company just reported its latest quarterly results. Is striking a careful but encouraging balance between growth and profitability, and Wall Street is extremely bullish on the stock. Cybersecurity constantly demand more convenience from their product and services. One way that happens is through digitization. To do that, businesses adopt cloud computing technology that allows them to reach customers online. But that can be a double-edged sword. Operating in cloud offers business new opportunities to generate revenue. It also exposes them to cyber threats that can originate them from anywhere and can strike at any time. The threat from cyber attacks continues to grow, and consulting giant McKinsey and Company predicts it could cause $10.5 trillion worth of damage to business per year by 2025, a fourfold increase from 2015. Thankfully, CrowdStrike exists as a leader in artificial intelligence-based cybersecurity, which is far more effective at thwarting attacks than traditional methods. Okay, only 15 minutes. Thank you, and this is it. I have to go to bed. It's getting too late, 12:32 at night. Okay, see you and have a good night. Bye bye, everybody.